Hi, this is Steve Erdman with Chart Chatter on Monday, August 24th. The market we're going to discuss today is the stock market index. I think that's everybody's point of interest today on this day when we're seeing some major corrections out of the Dow. When we went to print, the Dow was down 700 points. That's after being down over 1,000 points in a day. And we'd like to give you a visual of this chart pattern so we can kind of give you an idea of what you may or may not expect. So if we go to the chart now, we're using a weekly S&P E-mini chart today just to show you the extent of the move. We made our low in this market back on March 6th of 2009. And the high, the recent high was made here in May at 2134. If you keep in mind, last week's high was 2103, and the market, when we came to print, was trading at 1873 in the E-mini S&P. It's a horrendous correction, and I want you to get a perspective of the different support levels that may come into play here as the market sees some of this correction. I'm not suggesting necessarily that we're in a full-fledged bear market, but I want to give you a word of caution about, maybe taking just verbatim what a stock market broker is telling you about how the market is good and going to remain good. It's created and sustained by investment flow, by capital flow. So I think it's critical that you understand what the market has done and what it may do. If you look at the obelisks that I've put in this chart, I've put 5 different circles in there that may act as temporary support levels for the market when it sees some of this selling coming into the market. But the ultimate potential of a market like this, a 50% correction of this entire move would come down at 1468. So keep that in mind, and I'd strongly encourage you to give us a call so we can discuss this in more detail and develop some strategies that you might want to employ. Have a good day.